And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
And good morning, everyone. Welcome to the market forecast for Wednesday, September the 7th. My name's John. Thanks for trusting me with your time. As always, our focus here is on finding accurate context, always remaining patient, and thinking about risk management. Well, if you're already in the markets, hopefully things are going your way. Not seeing anything huge going on in the markets here just yet. It's just barely September, and it's already National Acorn Squash Day. Sounds a little bit more like fall than I'm ready for just yet, but I do like some acorn squash. As far as economic numbers are concerned, really the only economic number today is the international trade number. Now, they were looking for a drop in the outlay of international trade. Last month's number was minus 79.6 billion. They were looking for 70.3 billion. It came out 70.7 billion, but that's still a 12% drop in outlay in international trade. I'm viewing that as a really a good positive. I don't know how much it's going to affect markets, but overall, I think that's a good thing. We also have several talking Feds today, which I think are going to be a large part of the focus for our markets this morning. 9 o'clock, we have Meester. 10:55, we have Brainerd. And 1 o'clock, we have Barr. And then we have Beige Book also at 1 o'clock. That Beige Book is always a warning to me that I know we are 2 weeks from the next FOMC meeting. We'll have to see what they decide to do. As always, we are going to be focusing on context. You know, sometimes the market is giving us easy context or recognizable context. Nothing is ever really easy about this, and sometimes not. So, looking at the board here this morning, we've got equity futures really just kind of holding close to the bone here. They were a little bit higher earlier. They're a little bit lower now. We're going to call this a steady opening, as you know, we still are dealing with global economic slowdown threats. All eyes are probably going to be on Apple today as they are ready to introduce the new iPhone 14 today. I've been practicing my ability to say no because I know my kids are probably going to want the newest and neatest phone. So no, no. I've been practicing that. European Commission is going to propose a cap on wholesale electricity prices as they start to get into winter. It's going to be a tough go for all of us to pay for our energy costs, of course, and at the same time Putin threatens to withhold all forms of energy from unfriendly countries. Crude got a boost a little bit marginally last night, currently trading lower into the open. Make sure that you hit the lucky like button if you like what you're seeing here. If not, tell me, Jay Hoagland at topstep.com. Make sure you share, comment, question, feedback, and heckle at will. Also, love is also welcome here on the Market Forecast, and subscribe to our YouTube channel so you get notified when we do go live. VIX this morning up slightly at $27 index, putting in another 52-week high last night. Currently, well, last I checked, trading at 110.64, and the yield on the 10-year holding largely steady this morning at about 3.3%. Oh, boy. So, anyways, let's say good morning to everyone. Scott Saw's first one in the morning. You conquered this morning, Scott. You saw and you conquered. Theo, good morning. Brian Frederico Shaw commenting on how we got to stop these in range and value days. I wish I could control that. That would be something. Terry King, it's all part of the context, though, right? Terry King, Marcelo, Dan Trader, Jules Patrick, Serenity Trader. Good morning, George Duquet. Dead letter opener, my guy Vince, good morning. Jay, David, Snowflake, Eric, Rusty Golfer, Joe, good morning. Unikis with the quote for the day. I absolutely love these. When everything seems to be going against you, remember that the airplane takes off into the wind, not with it. Very nice. Henry Ford. Yes, somebody who's very successful. Rob T, good morning. Patrick Piples, good morning. Mango Heist, Three Lines, Snowflake, Hagel Matters, good morning, Michael. Ray Paradise, it's good to see you. Don't think we've seen you here for a little while. It's nice to have you back. Brody, Dimitar, George, laughing probably at my practicing saying no. Dead letter opener. Energy companies bailout incoming. Oh my goodness. That's what we need is another bailout, right? Dell Trader. Dead letter opener. Is energy a bigger sector than real estate? Uh-oh. I don't know. It's a good question. Ron, good morning. Grim Reaper Trader, Serenity Trader. D Hot Dollar Index to the moon, Alice. Bang zoom to the moon. And Andrew, good morning. Good morning. So again, thanks for joining me. Today is Wednesday. It's Wednesday, right? Yeah, that's what it says right here. Wednesday, it's group coaching day. There's the link if you'd like to join group coaching. Next week, however, group coaching is going to be changed a little bit. We're going to do a special release of group coaching called Tales from the Coach. We're going to take probably about the 10 most popular questions we get when we do our group coaching, and we're going to go over those for everybody. If you've never been to group coaching, this is probably a good idea to get your feet wet and see what some of the things we discuss are all about. And of course, you are always welcome anytime we present it. So today will be the last group coaching session. Through next week, we'll be presenting Tales from the Coach. That's going to be at 12:30 Central on on Tuesday. Yeah, maybe it is. Maybe we will be still having group coaching. Yeah, it's Tuesday and Thursday, I think, are the days we're going to be presenting Tales from the Coach next week. Let me double check this. I got to make sure I got my act together here. So, yeah, we'll be having group coaching next week on Monday and Wednesday, Tales from the Coach on Tuesday and Thursday, as well as Make Hogue Money next week on Tuesday and Thursday. I'm going to be a busy guy next week. That's okay. I look forward to it. So next week, Monday and Wednesday, group coaching. Tuesday and Thursday, Make Hogue Money early, and then Tales from the Coach at 12:30. So I look forward to seeing everybody there. All right. Let's go ahead and jump into the charts here. We've got about 6 minutes before the crude opens up. So we're going to start with the daily in the S&Ps. We'll try and watch the opening in crude oil. Looks like it might be an interesting one, and we'll see what these markets have for us in context. Tales from the Coach is Mango Heist. It's probably about the 10 most popular questions we get in group coaching. So, things that that traders question quite a bit. We're going to go and we're going to take a look into those. I hope it's good. Hope it's a good one. Hope everybody enjoys it and gets something out of it. That's the goal. All right, so off to the daily in the S&Ps. We had a nice little jump in the open interest yesterday on a day that was really kind of balanced. It's a normal trading day. We'll see that here in just a second. Futures volume was relatively weak, but we had a pretty good uptick in New York volume. Volume on the New York Stock Exchange was over 4 billion. We haven't seen that in a little while, and it tends to happen on down days. So with the downward motion and the increase in open interest, we're betting that we've brought in some new business to the short side, new sellers looking for price to continue this move to the downside, and why wouldn't they? So far, our downside structure in medium time frame seems to be holding up relatively well, right? We've got some open interest increase yesterday, volume in New York increased yesterday. We got some visuals down here. We've got this this trend line off these lows that we're currently kind of testing to and around. We've got this pivotal day from the 19th. We've been kind of focusing on that because this was a day where we kind of really felt like there was a change in the marketplace. The downside was looking like it was going to largely be somewhat over, at least for a period of time, and it brought forth a really good upside move, which now, of course, we are right back to where we started those. So this is going to be a point of contention, if you ask me. We had the completion of the Head and Shoulders last week. We're still testing down to these levels. We're going to see if we can find acceptance in or below this range here on this day, or if we're going to reject, or we're going to turn back to the other side. So this little trend line here is just a visual for us to be thinking about. This is kind of where this rally started. So kind of viewing this trend line is somewhat pivotal. What are we in the daily, in the 30-minute chart here? Well, a normal trading day yesterday. A normal trading day is a day where we maintain the initial balance as the extremes of the entire session. The initial balance is the first hour of trade. You can see this light blue line here represents the first hour of trade on TS Traders TPO charts here. We never exited. It's rare that happens. It also indicates that there's a potential for the using up of the ability of the market to facilitate trade in this area. So we'll be looking for some sort of move, probably away from this area, this normal trading day at some point today. But unfortunately, as Shaw Trader, as Shaw was saying, we are in range and in value. Does that mean we want to try and stay patient? Yes, unfortunately it does. Although, we with the normal trading day yesterday, the even bell curve of the TPO charts, relatively even, we're going to be looking for this market to move away from this. So my focus, I think, early in the session is going to be on the overnight high, which is high of value from yesterday, and our overnight low, which is largely the low of the range from yesterday. Opening, settlement, overnight inventory, nothing really to discuss there. So be patient. Better trade locations are likely to come as the day goes on. Of course, watch the opening range, which may or may not provide an opportunity. I don't want to take too much risk on it because, again, the market is largely opening in value. It's opening in balance from yesterday. So try and stay patient, look for better trade locations as the day goes on. Let's take a quick look at crude oil and watch the open here. So Putin's threat didn't really do much to price here in the crude oil contracts here in the U.S. Hey, look at that. How did I break that off? That ain't supposed to happen. There we go. All right. Yesterday we had some new sellers accumulate. We added an extra 12,000 estimated open interest on this down day. Volume was okay. I wouldn't say that this was a huge increase in volume. Basically, we were still range bound. So I'm looking at the idea that just staying in range kind of cut off some of the volume that we had yesterday. Again, pretty decent increase in open interest, estimated at 8,400. We are now testing the low of the area of value. We were discussing the low of the area of balance balance high. Like last week's low is the balance low. We're right on it. We're right on it. What does it look like on the 30? Here's yesterday, really just kind of magnetic towards weekly kickoff low, managing to close above it. We got overnight inventory short, overnight inventory long. I'm not looking at overnight inventory. We just opened with a gap. If we can't close the gap, we look for continuation on this move to the downside. Let's take a look at the 30-minute chart here, or the 1-minute chart, I should say. Here's our first bar. We're looking at 31 ticks of risk right now if the opening range trade were to happen. Still looking at 31 ticks. Oh no, I didn't just do that, did I? Yep, I did. All right, so if we were going to be trading this, the market looked out below the opening range here first. So we would be looking for a short and we'd be putting a stop in just above. Why? Oh, I gotta tell it to tell me. Show orders. So we'll go take a look back at this and see what happens. See if we catch an opening range trade. It wasn't too big. It was only 30 ticks. So we'll see what happens there. Let's go and move on here and look at the Nasdaq. Now that's a sim account. I just wanted to kind of discuss what the opening range trade is and how to really try and trade it. Yeah, Orion, the weekly loss limit is no more. You don't have to worry about that anymore. So here's the Nasdaq. Similar situation, a little bit different. When we take this trend line off, these 3 points here, remember this is the day when things changed in the marketplace a little bit for us. If we extend this, we're testing down to that. It's a lot lower in the S&Ps. No, Melk, that was a sim account. That was just a practice account. Just to kind of show an example of the opening range. Orion, you hit the second target then. Excellent. You're getting funded? So here's that opening range. We took the short because it broke out the low of the opening range first. And we got basically a 20 tick profit in it right now. The stop is a couple of ticks outside the other side of the opening range, just to show an example of how the opening range trade can work. So back to the Nasdaq. Added 6,800 in open interest yesterday. Still testing this trend line on the S&Ps. That trend line is down here. So we've reached our target for our head and shoulders yesterday. We've been testing this trend line, which is the trend line basically where the market broke out to the upside on the 19th of July. We're still testing it. Another normal trading day yesterday. Volume was just okay yesterday in the Nasdaq. Here's the 30. Again, opening in range and in value, normal trading day, even bell curve. As far as TPO is concerned, this market is possibly primed to move away from the range from yesterday because, again, it utilized a lot of the ability to facilitate trade yesterday. That's what the market did. We had buyers and sellers meeting in the marketplace freely and exchanging contracts. So if there's a change at all, any difference of perception of value, that's what we're looking for. Our overnight high, an interesting area for an execution. Again, our overnight low, another interesting area for an execution. But again, I'm going to try and stay patient because the market is opening in range and in value. Let's look at gold now. Oh, our poor maligned gold. So, in short time frame, we've got balance remaining. We got last week's low as our kind of bottom of that area. We've got the high of this bar here, I think, more reasonable for the upper extreme of this area of balance that we've been in. We're looking at around 1725, and then last week's low of 1699.10. We added 3,200 in open interest yesterday. Volume was okay. It wasn't tremendous. We still have this swing low from back here on the 21st that largely remains unchecked. It leads me to believe that we may be getting a little bit cheap here. Just the fact that we haven't been able to actually reach down there and check that level. Again, you mentioned yesterday, W bottom. This area down here, last week's low and this swing low are really critical for this market to be able to pull out of this and continue a W formation and continue the push to the upside. Take a look at the 30. Okay, we've just come down and rechecked this naked point of control from back there. I'm going to shorten this up. So that's checked in regular trading hours. It checked last night in the overnight, but I much prefer those to be checked in the regular trading hours. Market opened in range out of value, seeing the market continuing to try and push to the downside, which is good. That's all right. It's going to offer us opportunity. My real best trade location that I can think of today is for us to come down here and recheck last week's low, and somewhere between last night's low and this area, I see some pretty large fish. I want to see this market hold this level. We've got a little ways to go before we're going to get there. We seem to be rejecting value and range from yesterday. I'm going to look for opportunities to sell strength, but only against levels that I can limit the risk. I can't just close my eyes and sell. It's not that type of situation. So if I'm going to be looking for opportunities to sell, I've got to find pullbacks against day time frame structure. Well, we've got maybe a little bit of structure here. This was initially a support level, a demand level. It's no longer presenting as a demand level. It may now start to act as a supply level. So anything up against yesterday's low might be just enough structure for me to look for an opportunity if I get the chance. I got to be patient. I got to know that I'm likely to miss a trade. That's okay, because I want to demand good trade location. And Euro volume is pretty good yesterday. Dollar remains strong. Open interest increasing yesterday by 7,300, but overall it's been kind of waffling, which makes sense because the market's been very indecisive up here. We've broken out below. We've accepted below. Are we going to continue below? Here's the 30-minute chart. So here we broke. We kind of put in value below last week's low, kind of the lower extreme of the area of balance that we've been in. Closed below it. We're currently looking below it. We rejected the high from yesterday in the overnight. We're in range. We're in value. I'm going to suggest trying to stay patient, of course. But you're going to be looking to continue to try and sell strength into this market unless there is a real rejection down below last week's low and a reacceptance back above. We've got we got a gap here that remains unchecked. We've got a couple of naked points of control that remain unchecked. We don't have anything down here to really focus on. So if the dollar doesn't continue its tear to the upside, I think might be a pretty good opportunity for a move in the opposite direction here in the euro. And the 10-year, we've got potential acceptance below weekly kickoff low. No, rates continue to kind of leak higher, and they're going to be leaking higher again in 2 weeks. Added 8,500 in open interest on this push to the downside on not the best volume. That's a little bit concerning. If we get the opportunity back near weekly kickoff high to look for an execution, I would relish that opportunity. Maybe even some onions on there as well. So here's our push and our acceptance below weekly kickoff low. Long liquidation, it looks like, but it's not necessarily confirmed by open interest. Open interest has us adding more contracts instead of taking away contracts, which to me is healthy for the downside auction, which gives me another reason to look for the weekly kickoff low here, which has been relatively supportive. Support, to become resistant. Overnight inventory. Nothing really to think about. It's been both sides. It's been reconciled. We're now open. So it reminds me to think about, the market has been attempting to move lower. How good of a job is it doing getting there? What marks acceptance in a new area, a new level? It's volume. Okay, well, we had okay volume. Time, we are spending time down below this, and time does mark acceptance. Participation and momentum. We're missing 2 legs of the table. Time, volume, participation, and momentum. Momentum may come. Participation may come. As long as we hang down here, that this area up here looks prime for a continuation to the downside. Let's take a look at crude. Okay, so right now, just off the opening range trade, which we took. Why? Because we gotta. No? Because we opened out of range and no attempt to close the gap. We are below an important inflection level. We were unable to hold it. So we took that opening range trade. Now, they don't all work out this way, but right now it's a almost a $1,300 winning trade. So I'm going to just take it. Now we're going to cancel our stop, and we've got one heck of a nice trade to start the day. Pow. I love it when a plan comes together. Let's take a look at the nat gas. I saw a question about nat gas. We added 8,500 in nat gas in open interest on yesterday, on high volume, on a breakout. Momentum, time, and volume. We've got 3 of the 4 table legs here. Break out of the weekly kickoff low on good volume and open interest. Probability of continuation, because of that, I'm calling high. Continuation, maybe just down to these swing lows right here. These were viewed as too cheap in the past. This would be a pretty decent target for a move to the downside. Where does that take us? Takes us to 753. 753. Not a huge move or a continuation, but this would be the next level I would look for potential support or a continuation and a pullback to for resistance. Okay, we've got our kind of digestion early. We took to the sell side late in the session, again adding open interest and volume. We've been kind of holding, no real overnight inventory here. I believe we may have closed the gap. We did close the gap, but found rejection at yesterday's low. We're looking for opportunities, to be honest, to sell strength in this market. Anything, of course, can and will happen, but because of the volume and the open interest on the increase below the weekly kickoff low, we tested to 2 naked points of control. We've got lots of other visuals down below with which to kind of look to kind of go back and recheck. Not really looking for any opportunities for buys here. Not just yet. Not just yet. Of course, anything can happen. And the natural gas market is so volatile and nasty that I've only taken really 2 trades in natural gas, and I'm glad of it. It's a vicious market. All right. So, looking forward to group coaching today. Looking forward to all these things that we've got coming in for next week as well. Group coaching, Tales from the Coach, Make Hogue Money. Yesterday we had a couple of losses in the Make Hogue Money. We were a little bit aggressive, maybe too early. We're looking for opportunities to buy into the market yesterday. I did trim those losses a little bit for us after Make Hogue Money yesterday, so we're still in pretty good shape. Looking forward to group coaching today, Make Hogue Money again tomorrow, and we'll see if we can't make some money then. Right now, our job is to try and make money today, so take your deep breath. Stay humble, stay grateful, stay creative, stay calm, cool, collected. Be like Fonzie. And how is Fonzie? He's cool. Looking forward to seeing you again for group coaching. If you like the market forecast, hit the lucky like button. Tell your friends. If you don't, tell me, Jay Hoagland at topstep.com. Say a prayer for world peace, prayer for yourself. Be kind to yourself and to others, and have a great trading day. I'll see you for group coaching, and at the end of the day for the recap, which I put the wrong thumbnail on yesterday. It said forecast, but it was the recap. But I'll get that straight today. Get out there and profit today. Have a great trading day. I hope to see you later on. Blessings to you all.